posted better than expected revenues and profits in Q2, shrugging off concerns over the impact of transitioning to less polluting CPCB4 gensets. To discuss this, as well as the way forward, we are joined by Shveta Arya, the Managing Director at Cummins India. Good afternoon. Thank you so much for joining us. For Cummins, this was an important quarter, as this was the first quarter post-implementation of the new emission norms. You've seen strong growth this quarter. Could you help us break down this growth, both in terms of value as well as volume?
Yeah, thanks for that question. In terms of this quarter that went by, we saw growth across all our segments. So as you said, definitely CPCB4 Plus, this was the first quarter where we saw entire shift to CPCB4 Plus. Although the norms were announced last year, July 1st, 2023, but July 1st, 2024, we shifted completely to CPCB4 Plus. Now, same quarter last year was definitely impacted in terms of volumes because we had to revive CPCB2 supply chain as well. So this quarter saw the full impact of CPCB4 Plus, definitely. That is one reason. The other is in the non-CPCB4 Plus range in power gen, which is the higher horsepower above 800 kilowatt hour. We saw good demand, especially from sectors like data centers. And then our industrial business also showed very good growth coming in from the construction market, from the railway market, and good execution at our end. Our aftermarket business, which has been steadily showing us growth over the last few quarters, also performed well. So the growth is attributed to all of these factors.
Okay, Ms. Shveta, last time when there was such a transition, the industry witnessed price wars with competitors now introducing their CPCB4 Plus compliant products. Is this something which you think will repeat? Do you see any downside risk to pricing because of that?
Now, all of us, all the players in the market have launched products starting from July 1st of 2023 up till July 1st, 2024. So everyone has had a chance to introduce their full line of products. I would say that when we transition to newer emission norms, there is definitely a time period where the pricing settles down in the market. So we have not yet seen the full impact of the pricing settling down. I would say it would take another quarter or maybe two for the pricing to settle down in the market. That's what I would think.
Well, talking about pricing, how are your products priced versus your competitors on an average? What's the price elasticity or inelasticity for CPCB4 Plus products? Would you have to readjust pricing or hold on to your market share?
So price, as I said, will take some time to settle down in the market. We launched our products July 1st, 2023. So we've had this 1 year to work on our supply chain, to work on our products, to make sure that our customers pay the right value for the products. And we've had a chance to work on cost management of these products as well. So we definitely think that we are well prepared. We are providing the products to the market at competitive pricing and also providing value to the customers. Definitely, with more players in the market, pricing does come under pressure. And we are continuously working on cost management efforts so that we can be competitive in the market.
Okay, so, you had guided for around 13 to 14% growth for FY25. That's twice the GDP growth rate. Do you still hold on to these numbers?
We are holding on to twice the GDP growth rate, definitely. That's been our strategic push internally, that all our segments need to look for and move towards double than the GDP growth in the country. So that's definitely been our strategic push and continues to be so.
Well, another important segment is the export space. Although it's been a mixed bag, it has risen quarter on quarter for the last few quarters. Do you think you will be able to sustain exports in Latin America as well as Europe? Or do you see any downside risk in the rest of the markets, especially Middle East, due to ongoing geopolitical conflicts?
I would say that the geopolitical situation is still playing out. There are different markets which are behaving differently due to these geopolitical situations. And there is no one reason right? So there are different issues happening in different markets. Definitely, we saw in the last quarter that Europe and Latin America showed us some signs of improvement. We have been saying for the last few quarters that we do believe that exports have bottomed out. So we are definitely optimistic, I would say cautiously optimistic, because we are watching these geopolitical situations unfold around us. And like I mentioned, there's not one single reason that can be attributed. So various factors at play. It's a mixed bag as of now.
Okay, the other objective that you have is to improve your margins by 100 basis points. Is it at the gross level or you're talking about the operational EBITDA level?
We do aim for that at the gross level.
Okay, what's your outlook for EBITDA margin in H2, given that H2 FY24 has a high base on account of pre-buying? Our margin has been around 22% on an average.
What I can say is that we are still seeing demand in the power gen market, specifically in the sectors like data center, manufacturing, commercial reality. We are seeing good demand from the industrial business in the construction and the railway segment. Our aftermarket business continues to show steady demand. And internally, our focus on cost management continues. So the endeavor is to hold on to that kind of growth and those kind of margins.
So just a follow-up here, a clarification. In FY24, EBITDA margins were at 18.5%. In second half, it came in at 22%. Do you think you will be able to hold on to these 22% margin level?
There might be certain challenges to that because we are still seeing CPCB4 plus pricing play out into the market. I also mentioned that we are cautiously optimistic about the exports market. So it remains to be seen how this mix plays out and how it impacts the margins. So that remains to be seen.
True. Data centers is a huge opportunity as far as the Indian market is concerned. What's the total addressable market for your products as far as data center business in India is concerned? And what percentage of your power gen revenues could it potentially contribute going forward?
So data centers absolutely is a growth segment for us. And we are focused on the market. We definitely have a technologically good product for this market. We have great aftermarket service for our customers and good customer relationships. So we are looking and we are focused on this market. How this will grow for us, it is definitely a growing segment both in India and in the other global markets. And we do export some of the products for the data center markets from India as well. So growth in the domestic data center market, growth through exports as well. What share could it contribute to our power gen market? There are other segments in the power gen market which are growing as well. So the manufacturing space, the commercial reality space, all of these are growing as the data center grows as well. As of now, between 10 to 15% of the overall power gen revenues are contributed by the data center segment. And a few years ago, it was in single digits. So we definitely expect the data center business to more than double for us. How much it will contribute to power gen segment remains to be seen. That really depends on how the other segments grow and what they contribute to the domestic power gen market growth.
All right, Ms. Arya, take that point. Thank you so much for that comprehensive interview. That's the word coming in from Cummins, holding on to their growth guidance of 13 to 14% in FY25.